What's up, everyone? I want to review a bunch of things about market context, not having FOMO. We're going to go over a bunch of charts, show you some trades that we took in the Discord and some trades that I took. So it's going to be very key. There's going to be some good lessons in this video that you could implement to future trades. I definitely recommend sticking around. And if you want a very good trading resource, I'm going to link my Instagram in the description below. You're definitely missing out if you aren't following this. I post daily trading recaps on here, along with very good trading tips and tricks. The link to this will be in the description below. Definitely give it a follow. And now let's get right into the video. What I want you all to understand is you have to look at the market's context, essentially the bigger picture. We all sometimes, if I go to a chart, we get sucked into the smaller picture without looking at the economic events affecting the market, without looking at the higher time frame analysis. We see everything intraday, especially us day traders and scalpers, and we have to be aware of the market's context, any factor that's going to affect the market's auction process. Now, when I talk about this, I essentially always look at the S&P and NASDAQ. These are the only or the most leading indicators that I use. I give these precedence over any other equities, Apple, Tesla, Amazon. I always make sure the market is in agreement with my analysis. So I'll always look at the context of the S&P and NASDAQ. And I always need to see price, volume, volatility, and momentum to trade. If I don't have any of these factors, especially volume, volatility, momentum, I personally will either find it to be a lower quality setup, or I just won't trade it to begin with at all because it's not worth the mental capital and it doesn't fit my edge or my style on what I know makes me the most amount of money. Now, because of this, you need to have an immense amount of patience. You cannot have FOMO. A lot of people just trade something moving up, or they trade something they see moving down. For me, I have to trade my setups and my setups only because I know that's what makes me money. If it's not there, there's no trade for me, especially if these factors right here aren't present. Going into the pre-market plan, I post these every single day in the Discord. On Wednesday, we had the S&P 500 was the first one. We had demand at the 4272 to 65 area that we were bouncing off of overnight. We also had supply at 4283 and 84, which we were also rejecting. So the question that I had was, if we test supply above or do we test demand below, which participants take control? Once we get that answer, the tone will be set for the rest of the day. What I mean by this is at supply or at demand, we want to see the same participant show the same amount of responsiveness and cause an imbalance at that zone like it did at the first place in order for us to take a valid trade, as long as we have those factors that I mentioned earlier present. So the market opened up, and right away it was very apparent that we didn't have strong volume, we didn't have any momentum, and we came right into the supply imbalance at 4284 and 75. Now, at the same time this was happening, if I pull up the NASDAQ chart, NASDAQ was very balanced as well. We were moving pretty sideways. There wasn't any clear direction. It was just up and down. We didn't have the supply until later when we triggered the 145731. But going to the S&P, we want to see, especially in low volume conditions, an immediate reaction, not so much of the stock or the market just hanging out at that imbalance. We want to see participants show some type of aggression or show some type of sign that this is really unfair value, that price shouldn't be sitting there. So for us to rally into the zone and we kind of just hang out, we're not selling off aggressively, we're moving back and forth, really did not give me clear-cut signs to take the market short. Eventually, we did sell off. You could have got a quick 6 points off of this, and you could argue that this was an area of demand that we bounced at. However, I really don't see a valid area because the factors do not align. Now, going back to the bigger picture with the whole economy, the context other than technicals is we're breaking all-time highs every day. It's the end of the quarter. Wednesday was June 30th, end of the quarter. It's a holiday weekend. We have 4th of July coming up. And we've been seeing very, very low volume and volatility compared to what we normally have been seeing. So we have these factors priced in. Now we go into the smaller time frame and see what's going on. And if this confirms it, it's going to be tougher quality conditions and you have to trade accordingly. Trade accordingly with either A, smaller size, or B, take your profits fast and have a scalping mentality, which in my opinion is kind of hard with lower volume. But if you got 6 points out of that, it was valid for a scalp. We did rally, and then pretty much all afternoon we traded sideways. There was not any valid trades on this. Very low volume, very low volatility. This goes to the videos that I added to the course about FOMO hours and about having no momentum and what I look for in my setups to trade. So this kind of is the definition of what I don't like to see, which is good to use in analysis. However, NQ, which is a little different, had an immediate reaction at the supply zone at 14573. You all know I trade QQQ puts off of this. We sold off of this immediately. I personally did not take this trade due to the S&P conditions and due to other underlying equities. But if I were to review this chart, this did have an immediate reaction and we did sell off from it. It wasn't something that really just was hanging out like the S&P did. And we missed this demand zone by a couple of points after double bottoming, but I did not take a trade on this. I know some members did catch QQQ puts off of that supply and very good trade based off of that. Now that we have the markets context, let's look at the equities. As you could tell, equities will confirm, they'll follow behind the market. Netflix down here was extremely flat. Roku up here in the top left, extremely flat. Apple very balanced as well. Tesla made a move. We broke above a downtrend line, and this is where putting yourself in the shoes of not a retail trader would be. A lot of people see a break above a trend line or a break above a wedge, resistance, and they think they automatically have to play it without using context and without using volume to gauge the participation in the move. If you caught the breakout above the high and above this wedge, most likely you would have been stopped. The market knows where you're trading at. The market knows where majority is long or short. However, I want to review this Roku chart because this kind of goes into the market's analysis and where FOMO gets involved. A lot of people don't realize that how emotional this game is because of how flat the market was. I always say the quality of setups become much lower in my book if I had a scale from 1 to 10. So once I get that context of the market, I trade my equities accordingly. We did have a plan in the Discord for above the 445 area. A lot of members planned this out. My good buddy Dylan planned this out as well. And a lot of people did take this trade. However, based on how I prefer to trade, I did not take this. In hindsight, I should have. But we're not going to talk in hindsight here. We're just going to review the trade. Look at as soon as the volume and momentum started to build, you could easily scalp a quick position on this. However, if we were to look back at the market and let's just say we missed this move, we have FOMO, we see other people making money off of it and we want to make money ourselves. If we're buying on the way up after an extended move without any new demand being created or without a pullback into demand, our risk to reward is skewed. For example, if we're buying, let's just say here at the top, this pullback for about 4 points, most of the time is going to stop majority out. So always have a plan before entering. Don't just enter if you see something move up, and understand the conditions back in the market. And on Thursday, I want to go over QQQ. Keep in mind the underlying conditions because I really didn't see anything favorable that really gave me higher odds of taking a trade. I did not take a setup even though our plan worked out well. I know some members did, so I will review this trade for everybody. So from the pre-market plan, we had supply at the 4573 and 4551 and 3/4. That as long as we don't bid or base above 14560, I'm going to feel bearish. And we can't be too bearish because we have demand a little lower at 14 and then at 73 and 3/4. So now that we have our levels planned out, just like the S&P, this was lacking momentum again. Now we're on Thursday, so we only have one more day until the weekend. So conditions should get a little more drier than what they previously were. This 1451 supply zone, if we were to draw it, was from this move over here before the market opened. So as long as we really didn't base above this and create demand above it, I was feeling pretty bearish. You can mark this as pink if you want and not to confuse everybody. So we came up, we did reject the supply zone. Just like yesterday's action, we failed to break above the high. It's a bearish sign, and we sold off. I did not see any clear convincing signs, and we bounced right at this demand zone. This was an area that some members took it long. This did work out well. However, just because of the conditions, I wasn't comfortable being a participant in the market. I don't want to keep repeating myself. Just want to get you all to understand where my head was at. And then we dropped after this first opportunity. At this point, I'm going to invalidate this demand zone. And boom, we came into the second one. It did not give me clear-cut signs to take it long, even though this did work out and gave us a nice rally from this demand zone. Just goes to show you the power of supply demand. And sometimes our plans work out. We could prep for it all the time. But if we don't get something we like to see with our confirmations, or we're not comfortable trading in certain conditions, it's okay sitting sidelined. The market's going to be here tomorrow. The market's going to be here next week. Maybe sit sidelined, log this in your journal, review it, talk about how you could have traded it. We don't have to take every setup that triggers, trade only when our setups that we want to trade give us the signs to take the market. And getting a lot of questions this week about this. The courses will be discounted on the site. The prices on the site reflect the discount throughout the holiday weekend. So definitely take advantage of that. Once you get access to the course, you will have access to the Discord at no extra cost. And for the S&P 500, there really wasn't any clear-cut definitive areas that I really wanted to trade. It was very balanced overnight. However, one key point I want to make with this chart is during the day, it's very important as the market generates new information for us to be able to read the story it's telling us and portray that information in a piece of the puzzle, and we could take solid trading decisions off of that. So the market was very balanced before we did open. We did move up, very low volume conditions, but this move up validated this area right here to constitute as a demand zone. So when the market pulled back into this, I was warning everybody, new 1 hour demand zone. So this consolidated right here for a 1 hour period of time. Any pullbacks here should be defended from the early morning buyers. So put yourself in the context of the people that got long here, people that got long here. Any dip into the nearest demand zone should get defended. So we came into this around 11:30 Eastern, and we did bounce. I know a lot of people made money off of this. However, it was an immediate reaction. There wasn't any volume or momentum to really confirm this, because in these conditions, I need to see that. And then we consolidated. We did push up, and these contracts end of the day definitely did pay. However, I did not take this trade. It was perfect according to plan. It just didn't give me valid confirmation to take it long. And that leads me into Tesla, which had this demand zone on Thursday. We came into this, really didn't show signs of buying until 5 or 6 minutes after bouncing. Volume came in. I think there was news to support this. So price will always precede news. It'll tell us the story before news does. And we did get a quick 11, 12-point rally from this. Would have liked more continuation. However, this is very key because now on Thursday, we have buyers factored in. They defended it end of day at the 674 area, and buyers are factored in to this zone. So keep in mind the bigger picture. I went over this on my Instagram. We had a wedge, and we were watching essentially for that breakout out of that wedge with strong volume. As you can see, we have it here. And now that we had those buyers factored in, they essentially had the juice or enough strength and power to bring it up and test supply above or test the nearest resistance or whole number. So at 9:36, I played, this is Friday now, I played the 695 calls at $4. This was the best trade I had this week. It was very fast. It lasted 5 or 6 minutes, and I made a little over 80% on this. I played the 695 calls at $4. I wanted an entry around 685, 686, but I waited for it to consolidate a little bit that fits my scalping strategy. We moved up. We did break out of this wedge. Volume confirmed it. This did have volume. This did have volatility, and it did have all the clear-cut signs that I want to see to put a trade on. I have no problem putting a trade on as long as I have my factors, but if something doesn't align to what I know makes me money, I avoid it. This had everything leading up to it. I had the 695 calls. I was targeting this supply zone, but I also had a plan that this has been on watch all week. For once we're above 695, 696-ish, we can rally into 700 bucks and even better the 707 area. So now I'm long these calls. This trade starts working out right away. As you all know, the best trades I take work out right away. I always say this. We sliced through the supply zone. I had pretty confidence that we were going to move higher. I knew at this point majority of retail was going to chase. Very strong volume. It's kind of like euphoric capitalization volume. Then we consolidate right here. We break the high into 700. I sell before we get that push. I sell all out at $7.45. A little over 80%. Could have got a little more. These went up over 100%, but I'm never going to complain about profits. That was a perfect sell. Always sell into strength. When majority of retail traders are buying, you have to be looking to sell or question your long position because majority is wrong. And then this sold off pretty much all day and did nothing. We bounced at the demand again. It's not a coincidence. We found the bid there, but there really weren't any other trades based off of that. So besides this, besides everything I went over, I think I'm going to end it. The points I want to make are trade your setups. If you don't have conviction or you don't have clear-cut confirmation signals and you're not comfortable trading in certain conditions, stay sidelined. In my opinion, especially Thursday, Wednesday, even Friday, with all the economic news coming out, the holiday weekend, the low volume, it was best to just avoid it, save some mental capital, and be refreshed for next week. I'm looking forward to killing the setups next week. I know they're going to be very good. I have strong confidence. My setups trigger, and supply and demand is very powerful if you trade it in the right way. So I think I'm going to end it here. If you did enjoy, you did learn something, smash that like button for me. Comment if you have any questions. Be sure to follow me on Instagram. And the courses will be discounted on the website. There's no promo code. The course prices on the site reflect the discount going into 4th of July until Monday. So definitely take advantage of that. They're never going to be this low again. And peace out.